Yo, 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 we are back with another end of day report with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the infamous price trigger reports. You got to get yourself on in the game. You can get started with us trading for as low as $69 a month. And also, we have a free account where we demonstrate to you live each and every day of the trading week. We show you and demonstrate trading to you live with our free pulse pick of the week. Need I say more? The free pulse pick of the week by itself has been banging out profits in these markets. All right. Now, mainly we like to exhibit some crypto up in there, and then every now and then we'll switch from doing crypto, and then we'll add some forex. So basically, it flip flops between a crypto of the week or a forex of the week. And if you've been paying any attention and following along with it, I'm sure you have seen the power of the PulseWave price trigger reports being put right in your hand. In order to see that, all you have to do is go to PulseWaveTrading.com, open up a free account. We got some goodies for you as well once you go there. Also, we're giving out the free technical analysis study course for all paying subscribers. All right, you get the course free. I know Frank's been working overtime to get that up and popping. So just to let you know that's what's going on. What up to everybody in the live feed? What up, Red, Sling, Rick? What up, peoples? All right. The thing is, yeah, let me know. I forgot to ask him if that was going on. If the technical analysis study course has been put up on the site. All right. So anyone who is a paying member of the platform, you'll have it. It's there for you. You can peep it. All right. Okay. So what else we got? Yeah. So there's so much going on, man. It's a lot of news. Seems like things are popping off. Today, banks around the United States were experiencing problems. People couldn't access their online banking information and log into their accounts. They blamed it on everyone getting their stimulus checks going out at the same time, blah, blah, blah. But reading some of the comments, some people were saying, I know there was one report from California. Someone said that they couldn't get access to their, what do you call that box, the safety deposit box. They had no physical access to the safety deposit box because of the coronavirus thing. So they wasn't letting nobody in to get access to their boxes. Then in addition to that, they couldn't get anybody on the phone to discuss the matter with them. So I thought that was kind of rude and jacked up. But what else do we expect coming out of Cali? All right. So, oh yeah, the report's been up, man. Report's been up. The reports have been up for at least an hour now. I did put an alert in the trading room. You should have seen that. They said all the reports were out. The only one that was pending when I first made the notation was the U.S. equities, but that's out too. So all the reports are out, man. They've been out for over an hour now. No problem. Yeah, so man, just so much going on right now. The link to the article that I was reading from in the pre-market pulse scan, I did post that in the trading room. It's in a PDF. I went ahead and made that nice and tidy for you. Due to copyright strikes and just YouTube being an all-around tyrant, when I read, I don't say what I'm reading from. I'm just speaking facts and truth to you. If you want to know where I'm getting my information, all you gotta do is come to the trading room. Anyone who wants it, I'll upload the PDF. It's not a problem, but I don't want no problems. So I just talk. I don't show screenshots. I don't say nothing. I'm not even tell you what the source is. If you want to know, you can Google it yourself or come to the trading room and I'll post it there. But I'm trying to have no strikes, so we just talking. Just picture it as story time. All right. So that's how we do it, and that's how I'm gonna keep doing it. Even when I do my little individual stuff, I'm only gonna be just reading off, boom, and then we just go in just like that. That way, no copyright strikes, no nothing, no jibber, no jabber. All right, let's go right in. Let's take a look here first of all at we're gonna start off with crypto tonight. All right, so we're gonna do that first. So bear with me just a second. You didn't miss nothing, Tony. You didn't miss nothing, my man. We just starting off right now. We're just kicking it off. Haven't even put up the first chart yet, but we're about to. We're doing things a little bit different today. Trying to pace myself, take my time with it, so we can get everything done and into. A very good question was brought up to me today as well, and it made me think. It really did. It made me think. So I don't know, but we're gonna get into it and we're gonna see. We're gonna see. It was a really good question, and I think it is worthy of dealing with. All right. So first things first. Here is our Bitcoin. We're gonna start with Bitcoin. Okay. So by now, if you're really paying attention, what up, Dave? What up, Nathan? You've been watching these charts that I'm posting. Now, keep in mind, these are my algo charts. They may differ from yours. They may differ greatly from the charts that you get in your average charting package at your broker where you trade at or what have you. All right. These are algo charts. All right. My algo chart may be saying that Bitcoin is in an uptrend. When you look at your chart and go put a trade on, it may show that it's in a downtrend. Just understand these are algo charts. So they're totally different. They're very specific. They're looking at certain data and certain data points, not necessarily what you will see if you were to go online and do a search. All right. My stuff is totally different. It's all proprietary. It's just how I roll. All right. So what I did was I had to come up with a way to present charts so that you could kind of get an idea what I'm looking at per se. And the only way I could do that was just to put up the algo charts and let you see a little something there. All right. So it's the only way to take something super complex that is made up of hundreds and thousands of algorithms, looking at all types of chart patterns and money flows, and just I wouldn't be able to put if you said put the system on a chart so we can see it, it would be impossible. You wouldn't be able to see the chart. It would look something like this. It would look like that, and you'd be like, "What in the world am I looking at?" Because you'd be looking at just lines of code, just overlapping systems, and just all types of stuff. But this is how your chart will look, and you'd be like, "What in the world am I looking at?" Exactly. So I came up with an idea. I figured this out, how to make it palatable so you can kind of understand, what I'm talking about and follow along with me. Put it that way. And yes, I know some people have been confused because you'll look at the post trigger price reports, and they may totally contradict everything I just said in these videos. People have stepped to me about that, and they're confused. They're like, I don't know, because in your video you said that Bitcoin was going to crash, and then but the report said I should be buying it right now. So let me explain that to you. All right. What you're looking at in the videos that I present with these charts, these algo charts, this is not the system. All right. The system reports that you get, that you pay good money for, that is the system, not this chart. So if you think, hey, I don't have to pay him for nothing, I'll just look at his chart and make me a chart like that, and I'm good to go. I got the system. No, you don't. Trust and believe me when I say this is not the system. Anyone who's been with me for a long time in the live stream right now, they can tell you this is definitely not it. That's why when you look at the report and look at what I'm saying on the video, it may be totally different. Because at the end of the day, what do we do at PulseWave Trading, folks? We follow the system. We don't listen to what I say. We follow the system. I don't even follow what I say. I follow the system. And this is the difference between analysis and trading. You can look at a chart, even an algo chart, and say, oh, it looks like the market's falling. But then when you look at the system output, it says, nah, disregard everything you're looking at on your chart and buy this thing right now. And you know what I'm going to do? I'm going to follow the system. Just looking at a chart, that's what you call discretionary trading. I'm not a discretionary trader. Discretionary traders pull up charts, look for patterns and things of that nature, and then they place bets based on that. That is not how I do. That's not how I roll. I am a systems guy, 100%. I don't make a move unless my system tells me to. And I mean that to the fullest. So just want to put that out there so don't get confused. Treat these videos as information and helping you talk through and think through things on your own. But at the end of the day, it don't matter what we think. It don't matter what we think we know or think we seen or think we heard. The only thing that matters at the end of the day is where do I buy and where do I sell? And that's all I need to know. So I want to put all that out there for you so we could clear the air. So don't be confused by these videos. These videos are helpful. They're informative, but it's not the system. All right. So don't get it twisted. All right. So that's out of there. So looking at Bitcoin, you guys have been following along. You've been noticing, I pointed out to you the other day in the other video, that these charts are starting to look the same. They're starting to move the same. And someone brought up a good point in the trading room today. They said, is this kind of what you were talking about, how, you know, the crypto markets have pretty much been co-opted. The markets themselves have been nationalized and everything is controlled, like 100%, not allowing the cryptos and stuff to move. I'm glad that that question came up because that's exactly what I've been saying all along since 2016. I told you that was what was happening in 2016 with the 2 documentaries that I did. All right. So that's what you're saying. Yes. You see these inside days after inside days. These charts are starting to look exactly like the Dow and the S&P or Clorox or Colgate. You know what I'm saying? This is what this is looking. It's starting to look like stocks, starting to move like a stock and act like a stock. All right. And I'm glad that you're starting to see that. That's why I made the algo chart so that you can start to see the price action in a new light, in a better light. And I'm glad that people are picking up on that. Bitcoin is stuck, just like all the other markets. Mind the charts that I post up. Now look at this chart. This is the Bitcoin chart. Look at it. You got increasing bearish trend momentum. This is bearish weekly trend momentum. The green and the red lines right here represent weekly trend momentum. All right. And this is a daily chart. So the weekly trend momentum on this daily chart for the Bitcoin is in the bear camp. Okay. And we have officially turned bearish in the Bitcoin market. All right. You can see this uptrend channel was intact until it was broken. All right. Now the market started trending again. All right. This is very important. Bitcoin, technically speaking, from a technical perspective, has now started trending again. It's no longer consolidating, it's trending again, and that trend is downward. Momentum is down. Trend is down. Down, 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 and down. All right? Selling. Take a look at Litecoin. Chart pattern starting to look familiar. Here's your Litecoin. Where are we? Bear market, bearish momentum, bearish weekly trend momentum. Down we go. We're below the Kumo cloud. We're below the trend line resistance. The market is falling apart to the downside. That's Litecoin. Let's look at another chart. Here is Ethereum. Are you starting to see a similar aren't these patterns identical, just as I've been telling you? Identical. You could take the name off the chart and just look at it, and it will look like I'm showing you the same chart and just sticking a different name on it. The beginning stages of weekly bear trend momentum below the Kumo cloud, below the trend line resistance, negative momentum. This one's about to turn from a bomb to a bull. I'm sorry, from a bomb to a bear. And then support is looking to be broken around the 140 level. That's why that's no bueno, right? So we're looking at retesting the previous lows in the Ethereum. Then it's threatening to take the supports out once this momentum starts to accelerate. Right now, it's just turning on. Hasn't started yet, but it's about to. That's why you don't have the official bear yet. All right. It's still stuck in consolidated mode, but it's starting to gain on the bearish momentum side. Money flows are starting to look bearish in this one. Okay. But we're still consolidated technically. So it has a chance until this trend changes. We have a chance to explode to the upside and break this overhead resistance. This one's is still time bomb. All right. So we still haven't officially chosen yet. All right. So we'll see what happens. All right. Here's EOS. All right. So the E to the O to the S. EOS, same thing. Ticking time bomb. Momentum is flat, but starting to pick up some bearish weekly trend momentum readings that could put pressure on the price and cause it to come down here and revisit this bearish pointer and revisit these old lows. All right, so this is where we are. All right, let's see what else. Let's get out of this and pull up our next one. All right, I'm done with that for now. Now it's time to go over here, and let's start off with a couple of things real quick. We'll do that, and we'll do that. Okay, here we go. A few more things to look at. Figure we do it in succession. All right, so let's see here. All right, so this is the E-mini S&P 500. Almost kind of similar to your altcoin, right? Except for it got over the trend line resistance and then retreated right below it, closed below it. All right, so this one is still under the auspices of the bullish weekly trend momentum reading, but still in the time bomb. And instead of a flat momentum, your momentum is still rather bullish. So this one, technically speaking, you know, it has a chance to pop out. It could have, but it failed. And now we got a primary crash alert for tonight into tomorrow for the E-mini S&P 500. So it ain't looking good. I think it wants to fall down, and we'll see. All right. I think I remember the song. I think I got it. Tie me kangaroo down, sport. Tie me kangaroo down. So I think that's what's about to happen. I think this kangaroo is about to fall down on the E-mini S&P 500. We got that primary crash alert. So I think that's what's on and popping. Taking a look here at the Dow. Similar chart, right? Primary crash alert for the Dow, even though it's under the auspices of the bullish weekly trend momentum reading. All right, so looking like there she blows. Even though that momentum is still bullish for now, but we still got that bearish complexion. I think it's ready to rock and roll to the downside. I think the rally is over and is about to be sold. They're coming for it. They're coming for the neck. All right, taking a look here at the silver. Silver now has a primary crash alert as well, when under the auspices of a bullish weekly trend momentum reading. but we haven't hit the trend spot yet. Still got the ticking time bomb, which means we're consolidated price-wise. But yet the momentum here is still on the bullish side, but threatening to fall below it. So we still got some time, well, at least we did, until we got this primary crash alert. It's not looking good. Not looking good at all for silver. Take a look for gold. Gold had that primary crash alert, and today we fulfilled that alert. So we still got the bullish weekly trend momentum for now. Whenever prices kind of fall within this range of the bullish weekly trend momentum, it kind of mutes the move. So you can still have a move like you did back here, but it'll be muted. So it'll be somewhat controlled. It won't be as bad per se. Momentum is threatening to turn south though, but for now, believe it or not, it's still bullish. Got the bull right here. All right, so this is going to be interesting. Is this all we're going to get, or are we setting up for the next leg down in your gold? All right, so this is really becoming interesting, if I may say so myself. All right, your US dollar index. All right, it's freeing up your commodities, but your commodities aren't rocking and rolling. All right, so we have a offset going on here. You got a weak dollar, which should be causing commodities to skyrocket, but they're not. They're just as weak as your dollar because the supply demand aspects of this have been blown up. So as your dollar is dropping, so is your commodity prices. Really interesting dilemma that we're starting to see these markets in right now. All right, let's move to our final category. We're going to go and pull this up. Give me just a second. I'll be done in just a second. Oh, here it is. Okay. We'll look at those two things. We'll look at that. And then we'll look at that. All right, let's do it. Here we go. All right, so now let's take a look at the forex side now. Here's your Kiwi. All right, the New Zealand dollar is known as the Kiwi. As you can see, we got a primary crash alert on your New Zealand dollar as well. It moved up just like the S&P 500 and the Dow. Same trajectory, same chart pattern. Very interesting time that we are in, folks, with how the markets are starting to correlate with one another. Markets that normally do not correlate with one another. So your Kiwi is looking bearish right now. And look, we've come off of the weekly trend momentum. The bullish weekly trend momentum reading has now come off on your Kiwi. Still got that ticking time bomb, but the question is, with the dropping momentum, are we going to get a bear? And are we coming down? It's looking like we may on that Kiwi. Taking a look at the yen. All right, dollar yen right now is looking like it is about to get sold off again. You're in a bear market. You got that bearish momentum, bearish weekly trend momentum. You're below the trend line resistance, but you're above the Kumo cloud. So I think that the little upshoot that we saw today was just priming for the next leg down on this one as well. I think selling will come into this yen at some point here. Taking a look at your Canadian dollar now. Got a primary rally alert on this one. Looks like the trend line support may be acting as a strong support and being well defended at this point. We've come off of the bearish weekly trend momentum. Momentum is now pointed upward. Possible we could see a follow through for tonight and tomorrow's trading. I think one thing that could help the Canadian dollar right now would be if the crude oil futures could get a bounce tonight. That would help the Canadian dollar as well. All right, you can catch a bid off of that. All right, let's see here. Here's the Australian dollar. All right, here's the Aussie. Looking familiar, right? Moving in tandem with the S&P 500, are we? Primary crash alert for your Aussie. We got the time bomb ticking, momentum threatening to go south. We're below the Kumo cloud. We still got the bullish weekly trend momentum reading though. So this one, technically speaking, hasn't chosen a side yet. But it's looking like this side that it's about to choose is going to be to the downside. So we should see. Okay, so good question here we got in the live. Let's pull it up. If the USD is coming down, why is the Aussie coming down too if we're a commodity country? You know, that is a very good question. And unfortunately, I do not have a good answer except for the market answer. The market answer right now is that the US dollar is starting to strengthen up again. And right now it is threatening to go back above par. As we're speaking, it's up 26 pips and it is trading at 99.72. All right, and gaining a little bit of footing. And that's putting pressure on your cross pairs, strength of the dollar. So that's why your Aussie is in trouble of dropping significantly. It's because of that. As a matter of fact, let me just show you. Let me show you something. All right, so taking a look here at the overnight markets. All right, so as you know, these reports went out a while ago. And already your Dow is down almost 200 points. NASDAQ's down 82, S&P down 23, Russell down 15, Bitcoin down 220. Your oil is up 50 cents, trading at $20.37. Long bond down 4/32. Gold up $4.50, trading at 1744.7. Silver is up 11 cents, trading at $15.62. See how things are starting to shape up just a little bit. So there could be some hope, some hopium. We'll see how things look in the AM, but for right now, where I'm setting is looking like we may see some return to testing some lows in these markets. We cannot ignore those fundamentals. Okay, markets are going to do what they're going to do, and right now, I think the action is definitely looking on the other way. All right, so you got a question. Can we look at DIG? PulseWaves got me long yesterday and looks like I might get stopped out. All right, let's see. Let's see what's up. Let's pull up that DIG. All right, D to the I to the G. Give me just a second, and I will find that one for you. Let's see. Okay, here we go. All right. So DIG has been really not moving these last couple of weeks. Look at these tight trading ranges. So, all right. So right here, I see market came down again today and even gapped when it did it, but it wasn't anything really huge. We're coming off the back of the primary crash alert. Have you considered Doug at all? Did you do anything with Doug? Because now we've come off of the bullish weekly trend momentum reading on this one. Like I said, now I have not been doing anything in the dig and the Doug because remember I showed you, I said I don't like the dislocation in the charts. They need to make their minds up what they want to do. Remember the 3X ETFs was going through something past couple weeks. So I was like, I'm going to step aside from the 3X ETF just for a minute. And I said, if I do anything in oil, I'm just going to bang it out in the futures. So that's what I've been doing. I've been banging it out in the futures. Now I haven't done anything yet, but I've been watching it and waiting to make my run. If I do anything in the ETFs, I would probably do USO. I would probably do USO. Probably, maybe, if I were to do something with it. Let me just take a look at something else too, real quick. Let's see what's going on with Doug. Because when they do these, these reverse splits and all that stuff, it just changes everything, and you have to give it time to shake out. See, now your Doug came all the way down. Oil's been dropping. How is Doug dropping? You know what I'm saying? How what's up with the Doug? Oil has come off heavy. And look at your Doug, man. You dropped from almost $200 a share all the way down to $60, $55 a share. Really? Really? See what I'm saying? They don't broke the market with these 3x ETFs. So they've broken them. What are you supposed to do? And this is not even a 3x ETF. This is just your ultra. This is supposed to, track the markets, perfectly, basically. And it's not doing it. We dropped heavy. We dropped with the oil. This is an inverse ETF. It's supposed to be up. The way this thing is dropped, you would think that crude oil is trading at $40 a barrel right now. It's not. Look, let me show you. Let's pull it up. Hold on. Wait, let me pull it up. Let me pull it up. Hold on. Let's add the E-mini S&P to this real quick. I mean, not the E-mini, the crude oil futures. Here we go. All right, let's take a look-see. Let's do a side-to-side comparison real quick. Look at this. Look at your DIG and look at your oil. Your crude oil futures is on right here on the right-hand side. How is your Doug moving in the same direction as your crude oil? See what I'm saying? When you see dislocations in the market like this, that's not right. Oh, you can't see. Let me. Hold on. I'm sorry. Hold on. Forgot I had the quote thing up. My bad. Okay. Everybody got me now? Okay. All right. So everybody got me now, right? Okay. So I want you to notice this. Notice the charts. Okay. On the left-hand side is your DUG. That's your inverse ETF, right? It's supposed to go up when crude oil futures are going down, okay? On the right hand, we have the crude oil futures chart, all right? When this topped, it looked like so did this one. Let's see, this is February 21st, and this is, okay, March 19th. So as this thing was, this chart started falling as of February the 21st, and it's been going all the way down, right? All the way down, okay? When this hit here, this right here is March the 19th on the crude oil charts right here. This is March the 19th and your DUG. Your DUG topped when this first bottomed here. And then all you did on 319, crude oil went to 21.35. And then it went and hit that low of 19.25 a few days later. This started dropping, okay? This started dropping as this was dropping. Then we just oscillated here. We've gone from 19.25 to a high of 29.17 and then back down to where we are right now today. This is not tracking with the futures very well. You can see that now. See what I'm saying? It ain't looking right. It ain't feeling right. It's not right. It needs to do it. There's something hurt. Something broke that they need to realign and fix. All right. It's not looking good at all. What up? This is a weekly chart. This market is still down. Why is this market down? This market is down. New lows on this is a weekly chart. New lows. We're at new lows. So far, new low on the weekly chart. New low on the weekly chart. New low. Lower lows. All right. This is lower highs. What in the world is going on with this chart? What are you talking about? What's going on here? This looks ridiculous. This is a weekly chart. This is a weekly chart. How do you figure? It's not moving right. I don't like it. It's not moving right. I don't like it. I don't like it at all. They're messing with the mechanics of the market, and the market doesn't know what to do about it. I hate when they do that. I don't like it because it messes the game up. You know, you're supposed to be in here banging it out, and then they do stupid stuff that messes with the dynamic of the market, and then it makes it untradeable. Here's your OIH. Now your OIH is looking like it's supposed to look. It's moving like it's supposed to move. It's following your crude oil pretty good. All right. Here's your OIH right here. Here's your crude oil right here. All right. Okay. So this one looks more like this chart. Not necessarily identical, because crude oil trades at night and the OIH don't. But you see what I'm saying, though. It's in the same vein. You got this bottom, you got this bottom, then you got this one, you got this bottom, you got this bottom, and now this is starting to come down some. But you see my point. This is better. This is looking better. All right. This is following better. So I just hate to see it like that. But when it gets really silly, I have to go and just get in there with the futures, because then I feel like I have more control and I can manage risk and stuff better, because the futures trades at night. So I can put an order on right now, and I can lay down and go to sleep, and I know I'm good because I got a stop in place. You know what I'm saying? So at any rate, that's my analysis for now. That's what I'm seeing. All right. So with that being said, y'all, I'm out. I will see the rest of you guys in the trading room tomorrow, and I will see you guys for the pre-market post scan tomorrow as well. We made that big update to the reports this week. I know you guys are having a ball with it. It's really helping you to stay on the right side of the market and to keep you out of dangerous trades, if you will. So just follow the system, man. That's all you got to do. Keep plugging away. All right. It's a game of averages. You're trying to average out in the long run. So take every trade. Don't skip opportunities, because then if you're on a losing streak or you just lost your last trade, if you skip the next one, that could have been the trade to put you in the black. So you got to take all the trades. All right. It's an averaging game. You know what it is. All right. So with that being said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I will see you guys in the AM. Peace.